Are you tired of the 9-to-5 grind? In today's video, we're exploring 5 income investments that could help you quit your job and achieve financial freedom. Imagine waking up without an alarm clock, working on projects you're passionate about, and having the financial security to live life on your own terms. In this video, I'll walk you through 5 different income investments that can generate consistent cash flow, allowing you to replace your salary and gain financial independence. We'll cover everything from dividend stocks to high-yield savings accounts, providing you with a well-rounded approach to building a diversified investment portfolio. Let's dive in and explore these income-generating investments that could pave the way to your financial freedom. Let's kick things off with dividend stocks. Dividend stocks are shares of companies that pay out a portion of their earnings to shareholders. This means you earn money just by holding these stocks, regardless of their price movements. Companies like Johnson & Johnson, Procter & Gamble, and Coca-Cola are known for their reliable dividend payments. Investing in dividend stocks is relatively straightforward. You can buy them through a brokerage account, and it's recommended to allocate around 20 to 30% of your investment portfolio to these stocks. The key here is to focus on companies with a strong track record of dividend payments and a history of increasing their dividends over time. One of the best aspects of dividend stocks is the ability to reinvest your dividends. Many brokerage platforms offer dividend reinvestment plans, or DRIPs, which automatically reinvest your dividends to buy more shares of the stock. This can significantly boost your returns through the power of compounding. Over time, your investment can grow exponentially, providing you with a substantial passive income stream. By staying invested and focusing on high-quality dividend stocks, you can ride out market fluctuations and continue to build your passive income. So, if you're looking for a way to earn money while you sleep, dividend stocks are definitely worth considering. Next up, let's talk about dividend index funds. These are mutual funds, or ETFs, that focus on dividend-paying stocks. The beauty of dividend index funds is that they offer diversification, which means you're not putting all your eggs in one basket. Instead, you're spreading your investment across a broad range of dividend-paying companies, reducing the risk associated with individual stocks. Some popular dividend index funds include the Vanguard Dividend Appreciation ETF, VEG, and the iShares Select Dividend ETF, DVY. These funds are designed to track the performance of a basket of high-quality dividend-paying stocks, providing you with a steady income stream. One of the main advantages of dividend index funds is their simplicity. Unlike individual stocks, which require thorough research and ongoing monitoring, index funds are managed by professionals who handle the asset allocation and rebalancing for you. This makes them an excellent choice for investors who prefer a hands-off approach and want to benefit from the expertise of fund managers. Another benefit of dividend index funds is their cost-effectiveness. Most index funds have lower expense ratios compared to actively managed funds, meaning you get to keep more of your returns. Over time, these cost savings can add up significantly, boosting your overall investment performance. By allocating a portion of your investments to these funds, you can enjoy the benefits of professional management, lower costs, and the potential for both income and growth. So, if you're looking for a hassle-free way to invest in dividend-paying stocks, dividend index funds are an excellent choice. Let's discuss bonds. Bonds are debt securities issued by governments, municipalities, or corporations. When you purchase a bond, you're lending money in exchange for interest payments and the return of principal at maturity. Bonds are safer than stocks and essential for a diversified portfolio. There are various types of bonds, each with its own risk and return profile. Government bonds are the safest, backed by the government. Corporate bonds offer higher interest rates but come with higher risk. Bonds provide steady income through regular interest payments. They also help diversify your portfolio, reducing volatility. In conclusion, bonds are a valuable addition, offering steady income and diversification. Let's dive into real estate investment trusts, or REITs. REITs own, operate, or finance income-producing real estate. They offer exposure to real estate without the hassle of direct ownership. Popular REITs include Simon Property Group, Realty Income, and Public Storage. Known for strong dividend payments, REITs generate consistent income. By law, REITs must distribute at least 90% of their taxable income as dividends. They also offer potential for capital appreciation. REITs provide income and growth, making them ideal for long-term investors. Finally, let's talk about high-yield savings accounts. High-yield savings accounts offer higher interest rates than traditional savings accounts, making them an excellent option for earning passive income with minimal risk. These accounts are typically offered by online banks and credit unions, which can afford to pay higher interest rates due to their lower overhead costs. Some popular high-yield savings accounts include those offered by Ally Bank, Marcus by Goldman Sachs, and Discover Bank. These accounts often come with no monthly fees and provide easy access to your funds. One of the main benefits of high-yield savings accounts is their safety and liquidity. Unlike investments in stocks or bonds, the money in a high-yield savings account is typically insured by the FDIC up to $250,000 per depositor. This means your principal is protected, and you can access your funds whenever you need them without worrying about market fluctuations. High-yield savings accounts also play a crucial role in maintaining liquidity within your investment portfolio. Having a portion of your savings in a high-yield savings account ensures you have quick access to cash for emergencies or short-term financial needs. In conclusion, high-yield savings accounts are a safe and convenient way to earn passive income while maintaining liquidity. So, if you're looking for a low-risk income investment, high-yield savings accounts are definitely worth considering. There you have it, 5 income investments that could help you quit your job and achieve financial freedom. Remember to diversify your investments and consult with a financial advisor to tailor your strategy to your personal financial goals. By building a diversified portfolio that includes dividend stocks, dividend index funds, bonds, REITs, and high-yield savings accounts, you can create multiple streams of passive income. This approach not only reduces risk but also increases your chances of achieving financial independence. Don't forget to like, subscribe, and hit the notification bell for more financial tips and advice. Your support helps us continue to create valuable content that empowers you to take control of your financial future. Thank you for watching, and I'll see you in the next video.